Okay, so as per usual, feel free to put in to the chat what currency pairs you want me to look at, or stocks, or gold, or whatever it might be. Um, so we're ending a week where the US dollar has been climbing consecutively for 1, 2, 3, 4, 5, 6, come on, 8 weeks. And we have just broken out of that resistance. So we have a change of character in the market, which is bullish. However, that's not to say that the price won't come back in and then continue higher. Um, Now, next week will be very important for the US dollar, well, for markets in general. Um, so we've got US inflation data, US retail sales, which comes ahead of the Federal Reserve further into the month. So this data is going to be highly anticipated, and we've got to get set for it. So the US CPI comes out on the 13th, and the retail sales comes out on the 14th. Um, so we're looking to core inflation there to come in line with what it was in August, if not greater, and that would be essentially supportive for the US dollar. But rather than speculating, I'd rather not be in the market or have my position so far in profit and going well that I can manage manage that trade appropriately around the data. So, for instance, if you're currently in a trade and you're running it and you plan to run it, you might need a week for it to come to fruition or a few days. You want to ensure that you have that sorted before that data. Either you're out of the market or your stop loss is at break even or at a level where you're comfortable with it being hit. What I wouldn't be doing is taking out a medium term trade, a day ahead of the data, unless you maybe a couple of days ahead you can, so long as you are sure that the ranges can be met before the data. Now, what you can do is, well, I mean, this what I advocate is waiting for the data to come out, let the dust settle, and then act appropriately. If you see a setup on the back of the price action surrounding the data, then go for it. But just blindly getting into the market because the number comes out presumably bullish for the dollar or something, that can often get you caught out because of the volatility. Elsewhere, we've got the um, European Central Bank, UK labour market data, and UK growth data. So the euro is on the 14th. So we've got retail sales and the euro both out. Sorry, the ECB, both out on the 14th. Um, Now, there was some hawkish speculation being priced into the euro. So we'll just have to see how that pans out over the meeting. And we'll be looking also to Australian labour market data and China inflation and activity data. So it's going to be a very key week um, ahead. All right, so buckle up. Now, in terms of the dollar, we were seeing here, it's broken out. The majority of breakouts tend to fail. So when you see a breakout, that is enticing traders, investors, longer term money into the market. Their stops will be wide if they're longer term and big money traders, but that enables the price to come back in on them, and that's where we can take our opportunities. So we're looking to fade this breakout in the US dollar, right? So yields bounce back today as well, all right? So the dollar firmed out. Now, that is despite our start of session setup, where we actually were able to take advantage because we saw it coming of the sell-off, right? So this was the what was that? 7 o'clock in the morning, it topped out. 8 o'clock in the morning, it was showing us that it had intentions to move lower, and we nailed it in the Wall Street Open across your preferred pair, be it the indices, the yen, Canadian dollar, whatever it might be, the euro. All right, so we can use this Dixie chart, this DXY, as a guide for us to trade the dollar versus the rest of, its counterparts across the board. So, did anyone partake in any of the setups we discussed in the morning? Let me know. I hope you did well. And I'm going to start going through the pairs that you want me to go through. So, we're going to look at the Aussie, we're going to look at yen. Great. Gold and euro, fantastic. Good stuff. Well done. Congrats to those who nailed it. Dollar yen. Let's have a look at dollar yen. There was my optimistic outlook for dollar yen. And we were only able to get a small trade, but money was made nonetheless, shorting in the open. Now, what it's done, it's come right back up in. So it came short and it's moved back up. Let me get rid of all these markings. Well, in fact, just this here. Yeah, so as I said, it's come back up into resistance. And this is essentially a third push. So we've got 1, 2, 3 pushes testing these highs. So you could say this here was the first push. So we came up, blew off. So we pushed up once, twice, 3 times. Okay, so are we going to now finally see a significant sell-off? Well, not at this time of day, obviously, and stage of the week. But you never know. But we're talking about next week setting up. Yeah, setting up for next week. Now, Mondays are typically a narrow range day. Not always. They can be. I mean, when they do move, when the price moves on a Monday, don't get in the way of it because they tend to continue. They keep going. So just bear that in mind. You want write that down, take note of it. If you get a Monday runner, do not get in the way of it. So there's nothing to say here that this can't continue higher. But for me, I'll be monitoring for a opportunity to short. If we look at the 3-day cycle template, which, by the way, if you're new to here, you can find education around this template. So there's a couple of videos on YouTube that I've done that I've posted in the education section of Discord. So you can go there and it will run through these indicators and how I use them and essentially how I trade the weekly template. And I'm looking for signal days such as this over here was a signal day on Thursday. It was the first day of a number of days that closed red. So I've got an indicator for that. And that shows you, so these are the higher closes. This was the red day close. It closed lower. And what we were looking for, therefore, was an opportunity to sell high. So that's exactly what we got today. But unfortunately, it just didn't continue. All right, it came up for another push for whatever reason. Um, I'm not really interested because I just trade the charts and what I see in terms of price and market structure. Of course, I lend an ear to what's going on, and you've got the news that comes out and so forth that essentially tells you what's in the price. But I mean, you might from time to time get a surprise news event or an event or a speech or a comment that can dictate the sentiment for the day and turn things around. So, to be honest with you, I don't know what caused the dollar to rise there. Presumably, we got a rally in yields. Um, so that's supportive for the dollar. Why would we have a rally in yields? Well, someone out there is banking on a hawkish Fed. Um, so that's what it is. Um, so for dollar yen, what we did have, for instance, and this is where I will lend an ear, listening out for comments around the weakness of the yen. So we had the finance minister um, coming out mentioning that he's going to take a look at the value of the yen and he would act accordingly. So that's essentially verbal intervention. So he's got trading rooms, dealers, on their toes now, waiting for him to call around the dealing rooms, asking for prices, and so on. And with that kind of sentiment, you'd expect anyone that's short of yen not wanting to be too short of it or ready to um, get out of their positions as that sentiment starts to pick up, or in the instance that the Ministry of Finance in Japan actually do something about it and actively, physically go into the market and intervene to prop up the yen in value. Do I use fundamentals for your day trading? No, purely price action. I'm aware of what's coming out in the calendar and the timings of when that is. I'll glance at what the data is, and it might solidify my thesis on a trade setup, but that's about as far as it goes. I don't tend to, well, I don't try to predict the outcome of the news. I'm not that clever. I don't have that kind of um, information to hand, right? So I don't. I'm not a macro investor. I'm a day trader, so I just like to look at the price and whether it's out of balance or not. If it's out of balance, and I think if there's good value in it, then if a setup, I have to have a specific setup present itself, and then I'll go for it. So with the yen, I mean this could continue higher, obviously, but at some point we're going to get a big move to the downside into longs. When that will be, I don't know. It was quite disappointing, to be honest, to see that today. But never mind, there's another day around the corner. So maybe we're coming up to come down. But generally, when you get this type of formation on the chart, so you've got a W formation here, you'd expect the price to give you a significant correction, at least to the 38.2 Fibonacci. So we're well away from that. So that would be a move into the neckline, the origin of the impulse, in and around here. But you'd want to see this candle here as it is, followed by this candle here that would be accompanied with a bearish candle. So that's why I was looking for the short in anticipation that this will keep coming down. So I use this candle here as a signal uh, to look for setups to sell high, preferably at the high of the day or high of the session. I don't want to be selling at the low of the day or the low of the session. So that's what I was looking for. We got it, but it just didn't blow off. So what will it do next? No idea. Well, I do. I mean, it's either going to carry on. So it's breaking. I mean, let's have a look at this on the. So we've got these highs here yet that have not been taken. So, the market's either going to break out, pull back, and continue, or it's going to break out and fail and move sideways, or it's going to break out, pull back, and continue with the correction. So that's what we're looking for. We're looking for a move up to come down. Um, right. Well, essentially, what you could argue that, well, maybe it has broken out. I mean, besides that wick, essentially it has, isn't it? So the levels are key. So we're this wick here, between this wick and say that high. So I'm just going to mark that, and we'll pull that like this. So this is a key area because it's the upper quarter of the handle, 147. Right. So breaking up into potential resistance for a continuation to the downside, perhaps. So one to have on your watch list for sure for Monday and Tuesday. All right. Aussie. Right. So we didn't get the breakout in the Australian dollar. It was, I mean, you might regard this as a breakout, but it's not, is it? It's a failed breakout. So it didn't break out. It failed. It's a false break. So it's moved up, tested through those highs. So we're back to regarding that as resistance. It's not a broken market, and therefore we could actually regard this still on the front side of the bearish trend. And there are stops below these double lows, so this could be vulnerable for the for Monday and Tuesday. It's also last month's lows. So last month's lows as well. So you're bound to have stops in and around here, and the market might move into this for liquidity before finally moving up, breaking out, and continuing. If, on the other hand, we don't get that move back on the inside, or and this market just continues, then because we're on the front side of the downtrend, then we could be in anticipation of an ongoing bearish cycle for the near future. And we could be coming in as low as, say, the upper quarter of 62.70s. Right, so what's that, about 100 pips away? So that could be a downside target. We've got an M formation here. Again, this is a reversion pattern. Now, what we might find is we come down into the stops and move up because this neckline is essentially like a magnet for the price to revert back to the origin of the breakout. So that might be in play for next week as well. We were looking for that today, but no cigar. So the 38.2, 50%, 61.8 are all key Fibonacci's in that respect for the price to potentially move up into. Gold and the euro. Did you want me to go through those, or you were saying that you traded those today? I did okay out of Aussie, still in the red overall. Okay, well, manage your risk appropriately. Keep it small. Be patient. Good behaviors, and you'll be all right, and you'll get out of that drawdown. So, just keep swinging the same gold swing every day. Turn up every day. Be present. Keep your head. Keep you cool. Risk small. You know, as traders, we are risk managers, number one, and the profits will follow. Okay, okay. You traded those. Good for you, and you did well. Right. So, with regards to what we're doing here with this analysis, is that we're not going to be able to identify a setup per se because we've still got um, Asia. I mean, I trade the US, so in that regard, we've got Asia and London on Monday. So it depends on what the price action is going to be and how the market is set up for when we come to the desk at our session in the US. So looking for a setup now for Monday is not appropriate, but we can be preparing in anticipation for a setup if that makes sense. So, but yeah, let's have a look at the Nasdaq. You wanted me to look at the Nasdaq. So the Nasdaq, we are potentially up in resistance. Maybe we've broken up to come down. Um, However, if we're still looking for a short in the US dollar, if we want the US dollar to come down, then that should be bullish for these stocks. Um, so let us see. Black ball. See what their prices are like. Okay, so right then. So how do you see the market? What does anything stand out here for you? Have you got any insight to it yourself? Maybe we could get on the same page. But for me, I'd say we're in a broken down market. Right, so leaning bearish, and we've got in the money longs from the 25th, stops below 25th of August. So we've got all of this to trade down into potentially. Okay. So what we were looking for was that break of structure, which we got, and an opportunity to go long, and that was the outcome. Did you take the trade? Did you go long in the Wall Street Open? If you did, you would have made money, so long as you managed your risk properly. Uh, we got this W formation, so you should have been wary of the price pulling back into the neckline. So as the market is taking off, you can start putting money in your bank, right, and moving your stop up, adding to the or leaving your stop where it is and adding to the position um, as the market is confirmed going in your direction, and then moving your stop to break even, taking profits, and managing your risk properly. But that was the trade for today. What it will do next week? Well, we're now technically on the front side, the back side of that bearish trend. So we're breaking that um, microcycle, and we're finding support at the neckline of that W formation. So there are prospects of an upside continuation. There will be stops above here and above here, which the market could gravitate towards and potentially continue higher. So that is one possibility for Monday. Okay, so in doing so, it's coming up into potential resistance, which would be based on these lows and the breakout area. So coming up into resistance, perhaps to roll over and come lower, potentially. Or if the dollar is going to stay, well, move back onto the back foot, so weaken off, then we're looking for the continuation for a push into this range in here, potentially. All right, looking at the euro then. So the euro, we talked about this as being an opportunity on the day to go long in the Wall Street Open, or in it and around the Wall Street Open. I think I got in it just before the Open and added to the position when it was confirmed during the session. But we're now breaking, or attempting to, we're trying to break the resistance, right? So we came up through it, all right, and we pulled back in on the inside into the origin of the displacement. Um, so so we've come into the origin of that displacement, which could all be support and lead to a subsequent move back up to continue higher. That would be playing into our bearish thesis for the DXY index. Now, if this were to fail as support, then we'll be looking for a break, retest, and continuation to the downside. There will be stops below all of this here for the market to gravitate towards. Okay, guys, so shall we wrap it up there uh, and get set for a very busy week ahead? Okay, guys. All right, thank you. All right, guys. Fantastic stuff. Have a very, very good weekend, and we'll see you on the other side. Cheers for being here as always. Appreciate it. And to you. Thank you.